Good afternoon, everyone. This is Abid Khan, and you are watching Karachi Academy YouTube channel. Uh, we are doing CIE A level accounting past papers, paper 9706. Our paper is 9706, paper number 3 and version 2. So we have selected May-June attempt 2022. So we have done with couple of questions, and today we will be doing question number 4. Let's move on to question number 4. This is question number 4. This is basically a same question which you can see in CIE referred textbook of AS and A level written by David Hopkins on page 415. You can see the same question, more a question very much resemble to this. So idea of this question is taken from the question given in David Hopkins book. So a little bit changes, but I think that will be a good practice for you if you do David Hopkins book as well. So we will start question number 4. Ellen and Bobby were in partnership sharing profit and losses in the ratio of, these are the two partners, Ellen, Bobby. Their profit sharing ratio is 3:2. The partnership's statement of financial position at 31st March 2022 was as follows. Non-current, these are the financial statements of statement of financial position of the partnership, Ellen and Bobby. Non-current assets given 565, including land, building, equipment and motor. Current assets 220, including inventory, trade receivable and bank. The total assets are 785. On capital and liability side, the total capital Allen Bobby given total is 720, 400 and 320,000. Current account is given. So note that this current account always have a credit balance, but this is a negative account, which means it is a credit balance. So it has a debit balance. So this is normal one, this is a credit balance. Current liabilities are also given at 446,000. Move on and see what question is. A company MM Limited acquired Allen and Bobby's partnership business on 1st April. Acquired partnership business Allen and Bobby's 1st April. Company acquired all the assets. All the assets except bank account, motor vehicle. Carefully read the question. He is not taking all assets and liabilities of the business. Very carefully see. He is the MM Limited is acquiring only assets. They are not acquiring liability because no mention of the liability is here. And even in assets, bank account and motor vehicle, they are not taking over. The motor vehicle was taken over by the Allen, 18,000. Allen has got this vehicle. Partnership paid 45,000 in full settlement of the 45,000. Amount was 46,000, and they settled it. Finally, they settled at 45,000 and they paid 45,000 in full settlement. Value of the assets taken over by MM Limited: land 410, equipment and motor vehicle inventory. Total assets they are taking at they are acquiring at recognizing at 730,000. Goodwill of the partnership was also agreed at 40,000. So they are also recognizing goodwill. This will become 770,000. This will become 770,000. The purchase consideration was settled by ordinary shares in MM Limited at the value of 1.4. Okay, means the purchase consideration is 770,000, and they will be issuing shares of $1.4. Number of shares, they will give them 770,000. Let me open up my calculator. $770,000 they will pay them, and they will give them a shares having 1.4 value. 550,000 number of shares they will give them, and their share the face value of their share is 1, and 4.4 is the share premium. Move on. The shares were split between Alan and Bobby equally. Alan and Bobby equally means Alan took 275 shares at 1.4, 385,000, and Bobby also took 275,000 shares at value 1.5, 385,000. We can say this is our working number 1. This is our working note 1. Move on. What is required? Prepare a statement showing the partner's share of profit or loss on realization. It means we have to make realization account, because partnership business is winding up and they are selling their business off, so they will open up a realization account where they will realize all the assets and liabilities. Prepare the partner's capital account and also capital account in columnar form to show the closing entries. Okay, so A and B, we will try to finish it within a very short time. Now we will do all. So we have to make realization account, right? So first of all, I'll be starting this here. Question A, realization account I'll be making. What we do when the business is being wound up, so it's being dissolved and is being wound up. So what we do, we have to close all assets and all liabilities. The number is step number 1 into the realization account. What will happen? This is just for your they all, because realization account, what will happen, because they are not accepting, they are not taking it, but this will be realized. All the assets will be realized. This 565 and inventory and trade receivables, they all be realized. So what we are not supposed to make entry, just to, this is just for clarification purpose and for your better understanding. So what will happen, realization account will debit. Only till here, and these all assets will be credited. They all will be credited. So this way they will close from your book of account. Realization will account will be debited with 350,000, 150,000, 57,000, 75,000 and 93,000. So they all account will become closed from your book. And likewise, all the bank account will open there, because finally they have to pay from bank. So bank account will not be closed. All assets and liabilities. How much are the liabilities? Likewise, current account and capital account will not be closed, because they are proprietor's account, so they have to be settled. And in liabilities, we have 46,000 of the liability. This will also closed, and we will credit, and this will be debited. Realization account will be credited, and this you will debit 46,000 trade payable, land and building, equipment, motor vehicle, inventory, trade receivable. So all the assets and liabilities will be closed to the realization account, and now all payments or receipts will be done through this realization account, and then we will close realization account. So Alan has actually, number one, they have given you, they have given you shares of 550,000, 770,000 shares. Actually, what will happen, shares 770,000 will be, you will be debiting, and realization account 770,000 you will credit. So this is purchase consideration you are getting from company shares. Purchase consideration shares. So realization is being credited 770,000. Shares are there, number one. And what the Alan is taking this vehicle, motor vehicle, the company acquired all the assets except the bank account and motor vehicle. The motor vehicle was taken over by Alan at a value of 18,000. So what the entry, we are not supposed to make entry, but this is some sort of a working. How this will be, Alan capital you will debit, because he is not giving you money, so you will debit his capital 18,000, and 18,000, because now vehicle is not there, you have write it off from your book, you have closed it down, and you have taken motor vehicle to the realization. So all payments and receipts will be done through, all settlements will be done through the realization account. So see, this is the realization account will get credited for motor vehicle. So you will realization account 8,000, you can say motor vehicle, you can say motor vehicle. 1 minute. Okay, and one was vehicle, and other, what was the partnership paid, the partnership paid 45,000 in settlement of, so working to, what will be the entry for this? 45,000 they have paid, then 45,000 bank will get credited, and again you have closed down your liability into the realization account. So every settlement will be done through the realization. So realization account will debit it, we will debit, and bank will credit it. So realization will 45,000 you will put into realization account. 45,000 bank means trade payable, you have paid 45,000. Up now I can see how much is, just for my purpose, now how much we have on credit side and how much we have on debit side. $46,000 plus 770,000 and 18,000. This will be 834,000. And what is the balance of debit side? 350,000, 158,000, 57,000, 75,000, 93,000 and 45,000. Debit side is your 778, right? I will erase it, no issue, just for my purpose I am writing it. So the credit side is 834 minus debit side is 778. It means there is a profit of profit on realization is 56,000. And now we will see what will be. So we know 56,000 is the total profit on realization. So Alan share this will be distributed in their ratio. Their ratio is 3.2. So 56,000 over 2. Alan is 3/5 and Bobby share of profit will be 56,000 into 2/3. How much this will be? 56/5 into 3, 33,600. And 56/5 into 2, 22,400. So we have calculated Alan will get he will get 33,600 as a share of profit from realization, and Bobby will get 22,400 as a share of capital share of profit from realization. So we have done with part A. Now we will do part B. Part B, prepare partners capital account in columnar form to show the closing entries. Okay, we can make capital account here. You can make their capital account here. This is B. Part B of question, capital account. Remember one thing, this is, you can say, working 4 or 5. You see, bank account, you have balance of 52,000. This was balance. Out of this balance, you have paid 45,000. Trade payable. Then 52 minus 45. There is 7,000 balance in bank account. So we have to monitor this account as well, because there all the accounts are being closed. Only bank account and partners capital and current account are there. Rest of the accounts have been closed to the realization account. So we will make in the columnar form. Bobby, Alan. Bobby, Alan. Now see, how much was their capital? Capital account was this, 400,000, 320,000. Credit balances. So this is balance. How much balance? Alan has 400,000. Bobby has 320,000. So we have done with this. We have closed. We have closed this, right? Current account. Bobby has 25,000. This is credit balance. But Alan has a debit balance. So actually what we do, there is no need of a current account now. So we are transferring current account balance to the capital account, and we are closing the current account. So now this is closed. 6,000 current account. So we have closed this, right? We have just 1 minute, wrong button was pressed. Okay, where we were? 6,000, right? Just one thing I wanted to tell you, we have not closed this. This account is capital account is there. Yes, current account we have closed. Now we have closed all accounts, and now we have to share this profit. Will be shared with them between the partner. So Alan has got 33,600 to his capital account. Realization will be debited and his account will be credited. So Alan share of profit on realization, or you can say realization profit or loss, whatever share. Alan 33,600 and pardon, Alan, how much? Alan 33,600. Alan account, capital account got 33,600 from profit, and Bobby 22,400. Now realization account transferred to capital. Now realization account is also closed. Again, Alan has got this just 1 minute. Okay, so Alan has he acquired vehicle, but that vehicle we have already taken in realization account, so nothing is pending here. All things are closed. Now we have to close the capital account and we have to close the bank account as well. So how much are the balances there? I am just doing one small debit and credit here, right? So how much? 320,000, 25,000 and 22,400. 320, I will not be writing 1,000. 320 plus 25 and then 22.4. 367 400. And how much this is? This is 4,33,600. On debit side, we have 6,000. But one thing, actually we got purchase consideration. This is pending here, right? So the purchase consideration is the shares we got is on the debit side. You have to close them as well. So how would you be closing them? Purchase consideration 770,000 you will credit and you will debit capital Alan and capital Bobby. So, and it was 50-50. So we already have worked it out somewhere. Yeah, 385 and 385. This one, both of them have got 385. So its entry, we are not supposed to make entry. Again, this is for your better understanding. I am writing. You do not have to make have to produce these entries in your. You do not have to reproduce in your while doing your paper. On working side you can show it, but not on the rough on the fair side. You do not mention it. So his account will get 385,000 and his account will get 385,000. So by this MM shares account will also be closed. So how? So you have to purchase consideration 385,000. So it means this is 385,000, and this is 385, and plus 5 I have 391,000. And one entry more. When he got the realization, his account was debited. So Alan account we also have to debit 8,000 because he got motor vehicle. This entry you have to take effect of this Alan capital account. Now see how much is there. The total side 6,000 plus 18,000 plus 385,000. This is 409,000. So this is 409,000. It means we can say Bobby has 367,400 on credit side, while his debit side is 385,000. So what he has to, to balance his credit side, he has to bring in bank some cash. He has to pay the business because his account credit side is 367, while his, by taking the purchase consideration amount, his debit side is increasing. It means he has to pay to the partnership. And see, Alan credit side is 433,600. His debit side is 409,000. Means Alan has got 385,000 of the purchase consideration, has got motor vehicle, but and his account was debit, current account. Despite all this, he has to get money because his credit side is more, debit side is less. So his debit and credit side should be equal. So we will give money to Alan. So Alan will get how much? 433,000. 433,600 minus 409,000, 24,600 we have to give this money to Alan, and 385 minus 385,000 minus 367,400, 17,600 you have to get money from Bobby in bank, 17,600. So now their balance, his balance will become 385,000. 385,000 debit credit, account close. Alan account 433,600, debit side 433,600, right? And what else is has happened here? If we put this entry, he has 17,600 of 17,600 he has bought, 52,000, 45,000 and 17,000 he has given you. This one entry, bank debit 17,600 or Bobby capital 17,600. So bank is debiting by 17,600 Bobby capital. So now total has become 52,000 plus 17,600, 69,600. 69,600. So 69,600 minus 45,000. So 24,600 balance you will give to Allen Capital. So what will be the entry? Your Allen Capital will be debited with 24,600 and bank will be credited 64,800. So by this all the accounts will get closed, and we have done with A part and B part. This is all for today. If you have any doubt or clarification, you can write to us under comments of this video. We will try to get back to you. That's all for today. Thank you very much and bye for now.